Hello, Warriors. How's everyone doing? How do I sound? I woke up 10 minutes ago. Okay, hi, Sinatra, Mike, Bran, Ryan, Glenn, Alexander, AJ, how are you? Kurt, dollar ripping today. We'll find out in a half an hour. Luis, I sound like Barry White? Oh my gosh. All right. Okay. So let's take a look around. You know, not that much going on going into it. Ryan? Yeah, don't
Morning, sir.
tempt me. How are you, man? So, you flattish going into this?
Yeah, the only thing I've got on is a bit of a cable long that I took on the Bank of England last week. Still running that. Got to be a margin in it, so no need to give it up. And Euro sterling and dollar China, and that's my lot at the moment.
Okay. Euro sterling, kind of a, you know, is this today's action? Yeah. So far, looks
Yeah,
like
bit
it's
of
on important support, lower high. It's a coin toss to me. I sold this rally, didn't give me much. So I just got flat. Gold's trying to come back after yesterday's drumming, a real strange day. Gold down 25, silver higher. Not really strange if you're a silver bull. So there's silver. S&Ps, they were quiet yesterday, came off the highs a little bit, actually made a new high for this rally and unchanged. But you could throw your charts away in 28 minutes. Um, Blake,
really. I'll do it
huh?
now.
I
Can't I throw it away
only,
now?
uh, you know, throwing away your charts used to be easier. 20 years ago, 30 years ago,
Yeah,
when they
give it
weren't
up. Put them in the
on your computer, they were a piece of book or a piece of
yeah.
paper. Anyway, let let's see. VIX
Yeah,
following through. There were some people buying protection yesterday and today, but
yeah.
you get a benign number and this will just do this. But you know, this if we start getting through 15, um, that would might look like a bottom because over 15, then you're talking about 17 and a half. So,
Hey, good morning,
hey,
Dale.
hey, how are you,
Good.
Blake?
Hey, did you see what GameStop and AMC is doing this morning?
No, I saw they exploded yesterday. Are
Oh,
they?
uh, yeah, pull up AMC really quick, and then you can pull up GameStop. The stocks are absolutely flying this morning. It's crazy.
It's well, this is a repeat, isn't it?
Oh yeah, just pull up AMC here. Then you can just look at pre-market what it's doing. It's
Okay, yeah.
Yeah, I mean, and then you can look at yeah, it's just
Wow.
abs yeah, and then GameStop's the same thing. GME. Oh my God, it's
Yeah.
crazy. That's why volatility is ticking higher. Just those two
Okay.
stocks alone.
All right. And going up, so people are worried because this is happening, or that's
Yeah,
why they're
well,
buying.
I think that people are just you got a little bit of FOMO going on right now, and I think that's probably the overarching theme with the market. I think people are just starting to you know
I hear even institutions are playing the game. I saw a spot on CNBC where last year or 2 years ago, it was mainly just retail, and the professionals tried to short it and
yeah.
got carried out. So I don't know what it means. It means that they could just go out and look for short squeezes again.
I
Yeah, I
know what it
So,
means.
mean,
I know
huh?
what it means. I know what
What?
it means. Someone
What?
said it yesterday. If these meme stocks are back in fashion, then the Fed isn't tight enough.
Okay.
it's a true statement. I think that's a true
All
statement.
right. Okay. That's cool. All right. So, Blake, what do you have plans for today?
Yeah, I mean, well, my plans today were I pared back all of my dollar shorts, not, but I still have some.
Yeah.
And I think the dollar is going to, I think if there's any weak data, if we see a weak print in producer prices,
Yeah.
and then CPI tomorrow, again, everybody's looking for hot data. So anything weak's going to push us into all-time highs. And I'm going to go out on a limb here and say that if both CPI and producer prices come in weaker than expected, we're going to all-time highs, and then the risk of a blow off top is quite high.
Yeah. Like 5,400
I
or
think 54,
6,000.
5,500. Yeah, 6,000 would be a little crazy, but who knows? I mean, I just think that the market is prepped for it's set up really well for a short squeeze, and it's something that could carry the market a lot higher. It's like I said, if the data is weak, and I think people are, I mean, you look at the market, it's not letting anybody get in at all, right? So it's not letting anybody cover shorts. It's not letting anybody get long. It just, continues to tick higher. So I think the risk is that we blow out to the upside now.
Okay.
Yeah.
You want to take over? You know what time I woke up? 10 to 15 to 15 minutes to 5.
Oh my gosh. Oh
Yeah,
my gosh.
well,
All right.
I turned off the alarm and I guess I didn't get out of bed
You
and then just woke up in time to scramble, drink about a half a cup of coffee and uh,
we'll go
get
get
in
some more.
here.
Go get some more coffee.
Thanks.
I got you taken care of.
So I could be ready to react.
Yeah,
Otherwise,
yeah.
all
No,
right.
we got to be ready to react. Go get some
Yeah, all right.
coffee. But I also, we got Dave Keller coming up. He's,
Yeah,
wonderful technician.
yeah.
So
Okay. Thank
let me
you.
let me pull it over to Ryan. So Ryan, what's going on? What was your feeling going into today? And like I said just a moment ago, and maybe you can give me your thoughts here. Look at the S&P and look at us grind higher since we broke 5140 here, and look at what the price action's done. Like if you've been short, you can't get out. Market's not letting you out. And if you've been waiting for a dip to buy, it's kind of how I feel about the euro yen. One of my trade setups from the week ahead video was I just want to buy the euro yen on a dip. What dip? There is no dip. Like there's no dip. I'm not even getting a chance to buy it. And that's the same thing if you're trading the equity markets right now. You got a similar situation where equities aren't dipping, stocks aren't pulling back, and there's no dip to cover your short either. So how do you feel coming into today?
Well, everyone had their dip. The dip was the move down to 49.20. That was the dip, and everyone was screaming it was going to 4,800, 4,700, 4,400. All
Right.
the bears were screaming. Well, there was the dip. It didn't even get to the 38.2 with the whole rally from late last year. So there's your dip. Put it in yeah, there you go. Nice trend refresh. That's all that was. So now
Right,
with
but
every
but
chance
like
of
even
busting
like
to the
like
fresh
I said,
highs.
like this week, like this last week, there's nowhere to get in. If you're a shorter time frame trader, you're just kind of like you got to chase it higher now, right?
Yeah, well, there's a bit of support around that 52, 52.10. You can go with a tight long into that. You don't have to let it run minus 50 pips to know you're wrong. And
Yeah.
if it holds, then you can build a trade. You don't have to put all your chips on one trade to try and get in the long. You can just edge in little bits and pieces as the levels break. Hold 52.10, and the next level's 52.40s. Then the high is 52.80s. So you can go with a buy stop above there as well. And that's how you accumulate into an uptrend. You look for the break trades and the little bits of support. But as I say, you don't have to add big. You just add little bits and pieces, and maybe over the course of a couple of weeks, you get yourself a decent position on that's got some good margin in it. It's what I did when we broke 4,800.
Yeah, that makes a lot of sense. Okay, so and by the way, if you guys, it was interesting. I did a coaching session. If you guys don't know, we do that one-on-one mentoring. You can do it with Ryan. I actually met somebody met somebody that I'd met in person like 15 years ago, and I got a chance to work with her yesterday. It was really cool. It's nice to be able to polish some trade ideas and strategies with somebody that you've known for a while or have talked to over the years. I want to ask you this. So in the Flow Show today, what did you come up with as far as what you want to do with the dollar here?
Well, we're talking about the pound a lot because we had that employment data out, and the data was a tiny bit weak, nothing huge, but we had sticky wages again, and they're only set to stay sticky and maybe go higher next month when we get the minimum wage stuff kicking in. So there's a lot of pressure on the Bank of England and their newfound dovishness towards a June cut. And it ain't happening at the moment. We've seen a little bit of weakness in euro sterling, but nothing major. But the cable's holding up. I still think I'm in the mood to buy a dollar rally than buy a dollar dip than sell a rally at the moment.
So you would rather buy a dip. So if the dollar pulls back today following some weak data, you'd try to get on the other side of that, right?
Sorry, no, I meant in cable. I buy a dip in cable.
Oh, okay, all right, yeah. Because I mean, this head and shoulder pattern. I know I've had it up this week. I'm going to take it off to avoid confusion here, but I mean, it is a possible setup, obviously. But if we do break this resistance or last week's highs, I mean, it should squeeze. And theoretically, we are outside of this channel, this previous channel here. So, I'm with you. I think it could really squeeze higher. And I think the dollar still looks vulnerable overall. So, so the data was weaker, prices were stickier, so that little dip was very short lived. Matter of fact, let's see how short lived it was. It was only 20 minutes maybe.
Minutes,
yeah. Did you end up buying some?
No, I didn't. I was going to sniff around the big figure. We didn't get that low, but also I didn't fancy getting caught in something going nowhere while we wait for the PPI and POW. So I'm still long from last week, so I'll play that one rather than add a bit more. But I may do so over the data.
Gotcha. Okay, so how do you feel about today's producer prices that were that's coming up? Have you have any thoughts for today?
Yeah, first things first, PPI can tend to be a bit more volatile than CPI. If you get a 2-pip move in CPI, that can be a big deal. That's not such a big deal on PPI. So anything sort of 2 pips around the number, probably may not get a huge reaction, but a big variation, obviously, then we will. And it's pretty simple to play it. If it's hotter PPI, the market's going to undo some dovishness and maybe get a little bit more hawkish again, vice versa. If it's softer numbers, then that's going to be a green light for the market to whack yields on the dollar.
Okay, and you looking at the dollar index. I mean, I have to point out just a couple of things regarding the dollar. We rejected the 618 last week, and that is significant. It was really significant reversal last week. We still have a double top that has distance to play out, so we still have some room to go. But if we have this bearish pennant playing out, as long as we're below this 618 level right here, you can see it right there. There is some distance to travel just to even get to channel support in an overall uptrend. So I like selling any dollar rally that we see today. I think it would be a blessing if we got a little bit firmer PPI or maybe an inline print and the dollar, bounce back a little bit, because I think I would, as you pointed out, I think I would sell a dollar rally today as long as PPI is not too out of control strong, right?
Yeah.
So
exactly.
so what are your best and then I want to go into a couple other asset classes. What's kind of your best setup? I know you talked about sterling. Anything else that really has your attention?
Aussie Kiwi, I'm keeping an eye on. That was one of my things in the trade off UK that came out today.
The Aussie Kiwi or Aussie and the
Yeah,
Kiwi?
no, Aussie Kiwi.
Okay.
So
Yeah. Yeah.
I've got a level round about sort of 10, 15, 10, 20. And we've crept up there again. We had a little tap on it last week, held, but the dip has been pretty shallow. So I'm just wondering if we might get a little break up through that area again.
I'm with you on that. If you just like because I post my analysis here on the daily in basic technical analysis. If you guys don't know this, I've been very constructive while we're above the 109.45 level. That's it's the 50% retracement of this move. As you pointed out, it's very shallow, and on top of it, we've broken this descending trend line. So I'm with you. I think that. I think it looks pretty dang bullish here. But I don't know if I really want to short the Kiwi though, Ryan. And I know this is just the difference between what's happening in the Aussie and the Kiwi. But I don't even know if I really want to be short on the on the short side of the Kiwi at all, because if the Kiwi breaks out above this 200 DMA, this was my edge chart of the day yesterday that I blog about. It's on the free blog. I think this looks like a really good setup for longs. So
Yeah, but then
that's
you're playing that. You're playing that against the dollar. Aussie Kiwi. You're playing the RBA against the RBNZ, and the RBNZ are probably closer to cuts than the RBA are.
yeah. No,
So
I mean I understand. I'm just saying I don't know if the Kiwi, if I've got the New Zealand US dollar actually breaking out, I have a difficult time shorting the New Zealand dollar in any way, shape, or form. I don't care if it's
gotcha.
against the sterling or the euro or the Aussie. If the Kiwi dollar is indeed breaking out, that is a personal, that's a personal issue I have to get over. And maybe I need to seek some professional help
We run
there.
counselling now,
Yeah,
Blake,
I
as you
think I
showed a
do.
minute ago. But you can book a lesson with me.
I think I need to spend a little I think I need to spend a little one-on-one time with Ryan. Actually, I think what's going to happen here. Um, awesome. Well, I do like it though. I have to admit, I like the Aussie Kiwi. Hey, Dale, now that you kind of woken up, have you checked this out? I mean, check out this GameStop. How crazy! I actually woke up my wife. She bought it yesterday, and I woke her up out of a dead sleep about. I was telling everybody in the chat room here when I said I just woke my wife out of a dead sleep so she could hit the bid, and that was 4:35. So that was about it was at the highs actually. I woke her up. She's like,
Nice.
"What?" I'm like, "You need to sell." She's and, it's come
Couldn't
off
you do
since
it
then.
for her?
No, it's
All right.
her own. It's on her phone and
Account.
stuff.
Yeah. All right.
So,
I just
but
thought
she
maybe you could let her sleep and just get out for her.
no.
Anyway, all right.
No, but yeah, look at that GameStop and AMC. It's when I saw that this morning, I'm like, I had to go wake her up. I mean, that's silly. This is overnight. I mean, that's crazy, crazy, crazy moves. Anyway, as Ryan pointed out, the Fed is not tight enough. I thought that was a funny comment, but it's very true. Very true. A couple other things that are happening right now. The dollar CAD, you could see. I'm big triangle setting up. I have been very much a proponent of buying the dip to 136. Ryan, I know you were too, and but I'm a little scared today. How about if this data comes in weak this week? I think there's a risk, and Dale, I know you were shorting this last week. I think
Yeah.
there's a risk that whoops, that's not what I wanted to do. Let me
You know that other line you had at the bottom for the channel?
yeah, right
That'll
here.
come in. Look at where they meet. Look at that
Yeah,
confluence.
no, I think I think down
Yeah.
here is doable, and
Yeah.
I I really want to sell Canadian dollars, like I want to do this because overall, I think overall the dollar Canadian is going to go towards 140 in the months ahead. So if we get a look down at that 135 and change, I will play it on the long side. I would be worried about it right now in the very near term. Is what I'm trying to say, I guess. So, but that does look a little little vulnerable. So what, Dale?
Look how similar the last two phases have been off of 136. So just where your red and where your moving average in that trend line crosses. Look, we had the spike up or the run up to the highs.
Mm-hmm.
Then we had a big sell off. Then we had a little bit of a washout down to 130. What was that? 136.09.
Mm-hmm.
Then we crept back up again, crept back up. Then we did exactly the same thing. Another move to the high, another drop, and then another little washout. And then we're going sideways again. So it's two similar patterns of price action there, which can be important if we get another one. It shows buyers are willing to pick up the dips, but also sellers are willing to hit the rally.
Yeah, so I mean, that's why, if we get a dip like that, I think I'd be willing to buy it. And I don't know if I'd even do it against the Canadian. I'm probably would be more apt to buy it against the euro. I think the euro Canadian actually still set up for a really, really nice breakout. In the so like I don't know if I really want to play the dollar on the long side. It's so weird. I feel weird that I haven't I've become more of a dollar bear. I've got, dollar shorts on right now as we speak, but it's weird because I've been bullish the dollar all the rest or earlier this year, the whole year actually, and just kind of turned the opposite direction over the last couple of weeks. And I don't know how comfortable I am buying the dollar CAD down here. But you're right, Ryan. The price action does suggest that. And we should probably look around at a few other things. We took a look at the equity markets, and you see the S&P just kind of nudged up against this resistance. I think that if inflation comes in below expectations, we are going to be reaching for 5,500. And we're going to get, maybe a new high, if not a blow off top type of scenario.
How do yields look to you, Blake?
They look
Because I
vulnerable.
mean that's a big part of what's happening the next couple days here.
Yeah, look at this consolidation in the 10-year. I mean, we're just consolidating, right? So this if I was Grega Horvat, and by the way, he provides the Elliott wave analysis for ForexAnalytix, so you can see his analysis through here. But if I was Greg, I would probably say something like this. That looked pretty impulsive. This is a consolidation, and it looks like, yields are they're primed to go lower. I don't, obviously we're going to need the data to complement that, some weak inflation data, but I think yields look vulnerable. And how many times have you heard, Dale, over the last couple months that the bonds can't go higher? Yeah. I mean, I think they look like they're going to squeeze. We look at the 10-year here. If we break this previous support, that's current resistance. If this breaks, we're going to squeeze. And you won't hear any of the arguments about how much supply is hitting the market. It doesn't matter. People will be buying. So I don't know. I think yields look weak. How do you feel about them here?
It's all, it wasn't that deep of a break in the 10-year compared to what the strength of S&Ps, strength of metals, the weakness of the dollar. So, I'm, neutral, and I'll just let the number tell me. But it also wouldn't surprise me if those weren't the highs that we made last week in yields. And I look at TLT, and it's acting okay, but it really needs to get above 92 to prove itself. And last week, the candle wasn't that great in TLT. If you pull up a weekly on TLT, you'll see what I'm talking about.
Yeah, I mean that's a long upper shadow doji, which is they're neutral, but it tends to lean, actually bearish. So yeah, I see what you're saying here.
So that tempers my belief that yields are just gonna fall out of bed.
Yeah,
especially with news and maybe.
Well, it's definitely data dependent, right? I mean that's
completely binary.
Roulette.
Yeah, it's roulette.
It's going to be very binary this week, and that's with the S&P too. I mean, with stocks, it's like If the data is
Everything.
strong, yeah, with
Yeah.
everything. I mean, if the data is strong, we're going to make a lower high in equities. I mean,
Yeah.
there's no doubt in my mind. I mean, if this data is strong, equities will roll over, and we're going to see this channel support down here. If inflation, now remember, inflation, I want to point out, you look across the G20 and you look at the last 30 days worth of data. There's a couple countries off the top of my head. I have to go back and look. I think it was Germany, France, and I'm trying to think what Asian country. The data came in a little below expectations for inflation wise, but the other 17 like regions of the G20 and countries of the G20 came in hotter than expected. So the market's coming in with expectations that we're going to have hot data to like in 5 minutes, and if it comes in below expectations, no one's expecting that out of the U.S. It that's the catalyst that can drive us to all-time highs if data is weak, and we're going to find out in 5 minutes. We're going to get the old 1-2 punch today. So I'm coming in very light. I have very little positions going into this, but I do have a little bit of dollar shorts. I'm playing some Aussie and the Kiwi for the last couple of days, but I took off a lot of my dollar shorts going into this week. I've been playing the euro every dip into the 50s and into the 70s. I've been buying, and I've been selling at 108. And you can see with the euro's setting up perfectly a bullish wedge. And I'm going to delete some of the stuff really quick just to clean it up. You can look at it a bull flag pattern, however you want to look at it, but you can see higher lows, and basically minus the spike right here, minus that spike, it's pretty consistent highs. Moves above 108 are being sold, dips are being bought. So every dip I've bought and I've sold like 3 different times over the course of the last few days. And so I keep selling above 108, and any dip I keep buying. And now I'm out. But that type of price action leads me to believe that the risk is higher because it's just not letting shorts out of the market. And that's a fact. I mean, the euro's not letting anybody who's short is not able to get a decent price out of here. So, the risk is we have weak data and this thing will fly. And so that's going to come up here in just a few minutes. So Ryan, any last minute thoughts as I get ready for the data?
No, but I think that's a good point on the euro. This is a central bank, ECB, supposed to be cutting in June, and the currency's done nothing but go higher over the last few months. So it shows you how it's the expectation that gets traded, not the action.
Yeah, and speaking of which, I mean, expectations. Look, the market knows very well. Everybody, it's obviously common knowledge. Europe is very low, if not like non-existent growth. US has had great growth. We've had stronger data. We had stronger inflation, and the euro still holds up really well. I mean, you would think the euro would be trading up. Go ahead.
That's why you trade the price, not your
Right.
bias.
Exactly. Because you would think that euro would be a lot. Let me pull up yields here. Euro would be a lot lower than it is, and it's not. And that's the problem, right? All right, let me pull up the dollar index to the left. And that is the point. Okay, here's the dollar index. So we got the dollar index to the left here. There's a 15-minute chart. I'm going to zoom in a little bit. You got yields right in the middle. You got the S&P to the right. Here's your data flash. This is going to give us the producer prices. This comes with ForexAnalytix. You guys can find it right here in calendar. All right. There's the live squawk. I'm going to pull the charts back up, pull over data flash, and here comes the data. We have about 40 seconds. 40 seconds. And I'm gonna move that down. Dale, any last minute thoughts or ideas here before the data comes out?
Get it over with.
God, just give us the print so we can move on with our life, right? Jeez, Louise. And then you guys make sure you stick around because we're going to obviously give you an instant reaction of what's happening. But we have Dave Keller, he's now a contributor over at CNBC. And he's a wonderful technician out of the state of Washington. and very nice guy. Probably one of the nicer people you'll meet, I think. So make sure you stick around for Dave. All right, here we go. Strong data.
Hot,
Wow,
hot,
wow. Look, stocks
real
did not
hot.
like that.
Yippee-yi-yo-ki-yay. Who said that? But anyway, there's lots of wicks.
That was Bruce Willis.
No, I don't
So
think so.
look at the dollar here. Let's see if we get. I'm gonna actually buy some dollars. I've been looking for this dip, or I'll buy some
You mean
dollars.
fade
I'm
the
sorry,
dollar?
fade the dollar.
Fade
I
it?
just bought some
Yeah.
euro. That's what I wanted to do. Yeah, I bought some at
Okay.
70 actually just now. So
So we took out
um,
that 52 level in the S&Ps and we're above it. And this is what I was talking about with yields. We could make a run for new highs in those yields now. And
yeah, and I
I'm glad
just
I
bought the
wasn't
euro
short
at
Dixie.
I just bought the euro at 70 just a moment ago.
Yeah.
So I'm up 10 pips. I want
I'd
to try
say
to.
that it's warm data rather than hot data. As I said, this is
Okay.
PPI, so it can be a bit volatile. It's gone up 1 pip over last month. The core's unchanged. The X everything's gone up 3 pips though, so that's a bit of a change. Sticky, 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 I would say.
Yeah, it is. It is pretty
Yeah.
sticky. Yeah, look at the revisions too. But look at the euro.
Coming
I'm,
back. Nice buy.
I'm gonna take. I just took off. I just took off 14 pips. So it's like, why not take that? I'll buy it again on a dip. That was a really quick.
Nice shooting, Tex.
Yeah, I literally bought it here at 70 and I just sold it here because this is a 5-second chart. So I mean, it's like, why not pull that off really fast?
Canada didn't
Especially,
make much hay out of this number
let me get over there. Let me take a look.
either.
No.
Look
Mm-mm.
at that. Got
Well,
all the got some stops.
yep.
Anyway, S&P's coming back too. And then we'll go to David.
Yeah, a little bit. I mean, look, this is what Ryan said. S&P's down to 5,200. It's a dip buying opportunity. And
Yeah.
anybody that did it got it.
Yeah.
They got 5,200 and, they're up 10 points. I mean, if I stuck around in the euro, I'd be up 19 pips right now. It's like, it's producer prices. What market really cares about is CPI tomorrow.
Yeah.
I mean, that's it, right?
Yeah.
One of the big ones too, and of course, we're not talking about it because K-Man's not here right now. Look at this dollar
Yeah.
yen. I mean, this freaking thing, we're almost at the 618 retracement. I mean, that's been insatiably strong. There's been no way to get out of shorts here. I mean, and there's no Ministry of Finance coming in, no Bank of Japan coming in. They've slowed down the roll, and as I have people that text me and they're like, Japan's done for. They're finished. I'm like, no, they just slowed down this move. I mean, if the dollar yen goes to 170 and it takes them till December to get to 170, that's fine with them. They're done as long as we're not doing an accelerated move where the yen's losing 5% of its value in a month, and they're fine with it drifting higher. I don't think they're gonna complain much. But
Let's see what Dave thinks.
yeah, let's do that. All right. Hey guys, thanks everybody for sticking around. Ryan, thank you very much. Guys, if you haven't checked out the Trader Funding Program, you want to learn how to access some capital, make sure you do that there. And one of the other things I want to mention with that, this is where you have volatility. Days like today and tomorrow, this is how you can, have an easier time
I
passing.
think I saw that movie, The Usual Suspects. I was talking about your ad on the coaching.
Oh, right here and right here.
Yeah,
Yes.
yeah, the Usual Suspects. Wasn't that a good movie?
That
There's
was
Kevin Spacey
and
and
that and Ryan looks a little bit like Kaiser Sose, just a little
yeah, I
bit.
tell you what,
You do, Ryan.
I
That looks
yeah.
like you.
I'll take
So
that.
so guys, if you don't when you take courses from these guys, if you don't learn, they rub you out because they don't want their rep ruined. Okay, so you guys better work hard when you're being mentored.
All right, Dale. Well,
David
hey, have
Keller.
a great interview with
All
Dave.
right, David always makes it great. Welcome back to F.A.C.E, David. How are you?
I'm
Thanks for
well,
your
Dale. Good
patience.
morning. How are you?
Yeah, pretty wild. Market's been waiting for these numbers. As Ryan said, a little warmer than usual. So does this delay new all-time highs, or could this actually turn out to be a failing rally here? What do you
No, it's
think?
an interesting question. Today with the PPI, obviously tomorrow we got the CPI. That's
Right.
the key number really. I mean, if we learned anything from the last couple minutes, I mean the specter sort of floating above this market, and I think preventing the market from going to significantly higher levels is the prospect of higher inflation and chronically higher inflation. And that's been an issue that's come up a number of times here, but I think this week is going to be vital. We're all about trying to sort of pick out that first Fed rate hike, if and when that's going to happen anytime soon. And so the short answer for me is yes. I think inflation remains stronger than people would like. I think, the Fed has made it clear they're data dependent. And so if the data shows that it's still an issue and that rates need to stay higher for longer, I don't see how the market takes that as a positive outcome. I think that puts a ceiling on this market until we sort of move into this next phase, which doesn't seem to be starting anytime soon.
So I believe I heard you say the word hike. So we've already come off. We're re-rating this market number to number, Dave. Even though the moves in the market, are going on their own, but re-rating rates, from 6 cuts to maybe none to
Yeah.
now, then last week maybe two or three. And you actually brought up hike. Do you think there's a possibility the Fed might hike sometime this year?
I mean, it may be, and the fact that that's even a question you would ask and not be laughed out of the Zoom room is telling, I
Yeah.
think, because
Okay.
I mean, do I think it's likely? No. I mean, I would say
Yeah.
generally what the game plan most likely, I mean, barring some huge aberration in the data, would be higher for longer. The first cut is just much further down the road. Later this year, you have a couple cuts that go into 2025. And then you reassess, and by then you've had a lot more data to sort of crunch on. The market really, if you look at like the Fed Watch tool, they're not really pricing any sort of high likelihood of a rate
Right.
hike. But at some point, right? I mean, if the data is very overheated, then that has to be a conversation that's had. But the fact that that's sort of the spectrum of outcomes, as opposed to are we going to have
How
seven
many?
cuts or five cuts,
Yeah.
which is what the conversation was not too long ago. I think
Yeah.
that tells you a lot about how we're sort of rethinking this trajectory. The glide path has changed pretty dramatically.
So could the 10-year take out last October's highs without the Fed hiking, and the market hikes for them, taking them back to over 5% on the 10-year yield?
So that is actually a really good way to think about it, right? And I think a lot of people, and again, oversimplistically, think of interest rates as being managed by the Fed, right? So what does the
Yeah.
Fed do that the 10-year does X, Y, Z?
Yeah.
And you're right. I mean, remember, the Fed's just controlling the short end of the curve, and I don't think they need to change much. I think the longer that they would delay any sort of rate cut sort of sends the message that they're intending for rates to remain higher. I think the market can naturally push the 10-year yield much further than it has so far. From a technical perspective, I mean, as a trend follower, the trend in the 10-year yield remains upward, right? I mean, it
Yeah.
remains positive. The trend in bond prices remains down. And you can draw trend lines off of the lows to track that. You can just simply look at the highs and the lows and the fact that we
Yeah.
keep making forward progress. So the offense is on the field as far as I'm concerned, rate wise.
Put a
And I think,
weekly put a weekly up on that, David, and
yeah.
you'll see that I see a potentially incomplete pattern. We had
Okay.
our highs in 22, late 22, and then
Mhm.
another high in late 23. And a three drive formation would imply taking out the 23 high and then maybe peaking. Three
I,
drives to a top.
yeah, I think that makes a ton of sense. And the momentum, again, which, just basically tracks the trajectory of the data and what it's doing, says that there's
Yeah.
room to go, right? Which means there's more upside to be had. Very much a possibility. And again, I don't think I don't think a lot of people have been thinking about what does that mean when the 10-year yield's above 5%, or at least we haven't been thinking that way recently. It's been more, thinking of this rotation lower and how rates come down and what that means for
Yeah.
growth stocks. If we remain the alternate scenario, that's where a protracted decline in risk assets would sort of play out. That's where stocks would, sort of begin that C wave that we haven't seen yet. That's, I think, what could
Oh,
start
okay.
it.
All right. So why don't you tell people, a lot of people aren't really aware of that bearish outcome of the C wave. Can you, put up a chart and explain that count to people so
Yeah.
they, yeah, okay.
Yeah, so there are a couple ways to think about it, right? But I've highlighted just these two orange areas to show the similarities between what's happened from the March peak to where we're at in mid-May with what happened in late July to Labor Day of last year. And if you think
Any
about what
reason why you
happened,
used orange? I mean, without getting
well,
political.
no, yeah, I
All
have to
right.
be, I have to go neutral as much as possible
All
here,
right,
Dale.
go ahead. I won't say that joke. Anyway, go ahead.
No, so if you look right back in the summer of last year, we made a new high. We
Yeah,
came back and broke briefly below the 50-day moving average. We actually broke briefly above it, but then we made this lower high. And that was
yeah,
really the first major lower high since the March low earlier in the year.
right,
The
right.
momentum really stalled out. So instead of getting up to the overbought region like we did there, it's actually down around 60, which suggests that there's a lack of momentum pushing things higher. And then we
Yeah,
break down through the 50-day, and that was pretty much it. We had another 2 months of a downtrend of more further lows. We've
yeah,
kind of done everything up until Labor Day here. We're kind of right at the same amount time-wise,
yeah,
distance-wise, where we, made a new high. We pulled back briefly below the 50-day. We then went briefly back above it. And, no guarantee that we're going to get that after. I mean, that would be, I mean, it's possible, but I mean, that's not necessarily what happens, but it shows you how that second peak, that lower peak, how it often feels very bullish, right? I mean, I think there's a lot of people very much getting drawn in by the upward momentum off of the
yeah,
April low. The reality is that first kind of bear market rally is usually, I always say it's sudden and seductive. And I think both of those things we've seen. So the way that you see that this is happening, the way that you get out of the way of this kind of move is the quick move back below the 50-day moving average, the momentum deteriorating. And that's kind of right where we have not seen that yet. And I think that's what I would be looking to see. And if so, that's when I think you need to really go more risk off in your thinking and in your positioning to cushion yourself from the fact that you might have more of a protracted decline.
okay. Is that the C wave, or do you need
Yeah,
a
so
weekly?
the way to sort of label it, a couple different ways to think about it, but a common, sort of move is you have a big move higher, and then you'll have a three-wave structure, right? So like an A, B, and then C, and then you sort of make a
Okay,
lower low. And often what
okay,
happens here is the length of the first wave lines up very well with the length of the third wave. So you can see here they're very
yeah,
similar sort of moves and structures. What happened here was you ended up rallying to a descending 50-day moving average and failing. So what I like to think is after you've had a pattern like that, you wait to get validation that the downtrend is over. And you saw in November, you really had all the signals gapping off of the lows, back above moving averages, momentum getting much stronger. And so here, when the RSI actually got overbought again, was actually a sign that we were in the clear and that you were in a much stronger market environment. So I'd be looking for that sort of validation. If we would get another leg down, that's what you start to look for.
would you buy a break in the miners if we get one?
For
Uh,
sure.
yeah, they've really been, people, even physical precious metal bulls were completely frustrated in March with holding their gold share positions were down 40%. Well,
Oh yeah.
they certainly got it back in spades. They're probably even now.
Not bad. And again, I
Yeah,
just went to the Money Show last week, and people were very surprised to recognize that gold has outperformed the S&P and the Nasdaq year to date, which is
yeah,
not something we're used to thinking about or accepting as a reality, but
yeah,
it's true. So the precious metals trade is actually quite strong. Really coming out. I mean, March, April is really where it really started to
yeah.
started to materialize. But I think physical gold is a strong setup, and the daily charts are encouraging. Here you have the GDX testing the highs from 2023. There's a bit of a pennant pattern, which is when you have a big move higher, and then this sort of consolidation, this narrowing of the range of lower highs and higher lows. That pattern broke out sort of end of last week. That was on Friday when we popped higher. So overall, the setup is actually quite constructive. And then physical gold, I would say the same thing. You have sort of that the weekly chart of gold is what's really. I mean, we looked at the weekly chart of the
cup and
10-year
handle.
yield. Same sort of thing. I mean, if you look
Wow.
here, I mean, it's just this incredible base that we've broken
Breakout.
out of. And if you study market history, bases that are multi-year bases, which is this sort of flat rectangular pattern, and then when you finally break out, that's when significant gains can happen after that point. And one of the early technical analysts for me, Alan Shaw, was one of the first, sort of a couple generations before mine. He used to say, the broader the base, the higher in space. So you have a big multi-year base
Louise
for gold.
Imada takes credit for that.
Yeah, and Louise worked with Alan Shaw for years and years. That's all
no
coming from the
wonder.
same place.
And I thought I made it up until now. So, anyway,
yeah.
I guess I don't have any original thoughts. But you know what is interesting about this gold rally? I'd like your thoughts on it. Is that gold rally happened in the face of a rising dollar and rising yields, which tells me there's a new regime in gold. That
For sure.
doesn't
And I would
matter
say that's
anymore.
one of the great things. I mean, for me, of course, with a lot of bias, I would say it's one of the benefits of technical analysis and charting, which I know is core to what you guys are doing every day. Because there are a lot of narratives about what gold should do given the dollar or given rates or given risk assets. And the reality is, if gold's going up, gold's going up. And I think that definitely, I mean, something is very different from, and we've seen that not just with gold and the dollar and rates, we've seen that with leadership in the markets. We've seen that with sectors that are leading growth into value into defensive sectors. So we've seen plenty of rotation, I would say, for sure.
Your view on the meme stocks being resurrected from a few years ago?
Oh, the meme stocks, yeah, like the AMC and GameStop and all those.
Ryan said that I said I don't know what it means, and he said it means that the Fed is not tight enough for this to be happening again.
Well, certainly, right? I mean, if it's a rate tightening cycle, it certainly seems like this is not the time when you would have it. And these are bull market things that you would experience, right? Sort of a Wild West, everything's going up. I mean, again, for me, I started in June of 2000 in the industry. So I'm coming off of the late 90s. That's where I first learned about investing, where it was just sort of like, let's, throw a dart at a dartboard and see which stock is going to go up 10 times kind of thinking. And that is very much the mentality of these sort of swift and sudden moves pushing to the upside, and taking advantage of the fact that there's sort of this built-up pressure that could allow these stocks to gap higher. Very counterintuitive based on what we're seeing elsewhere.
Yeah, I hear it's institutional that's participating in this. A few years ago, like when that movie Dumb Money, it was just retail, and the big money was fading it and getting hurt.
Well, I mean, the whole essence of these, right? I mean, and that was the original sort of meme stock era, for lack of a better term, where institutions, hedge funds being caught short, and then getting pinched on the way up, getting burnt as the price popped higher. You get caught short, and you have to roll over, and it's a huge short squeeze. Now, I think the second time that happens, I think people are sort of, they've seen this play before, they've seen this movie, and they get the idea of how you could possibly bet it. The question with any of these moves is the sustainability of it, for sure.
Yeah. Do you have a dollar view, Dave? I'd like to know, because it's easy to have no view, but technically, really kind of rangy here.
It is the definition of a range-bound chart, and I would highlight. I
Okay.
actually didn't move this shading over, but the reason why I had that shading right here, this purple shaded area,
Yeah.
one of the things we've been talking about is the 107 level. 107 is the
Yeah.
peak from fourth quarter of
Right.
2023. That's
Right.
where we rallied up in the summer. We sort of stalled out there and then, almost made a new low going into year end there. We've
Yeah.
basically retraced 100% of the way back up to that point. So from a technical perspective, this is really more of a range bound chart. And when you have this sort of congestion area, you expect it to be very difficult for the dollar to get above there. But I would also say if and when the dollar would push above 107, that would, talk about a regime change. I always call it a change of character. Dollar over
Okay.
107 all of a sudden tells you that we're out of this range. This range that's been going is now broken. And from a technical perspective, we're in sort of a new era to try to dissect. I think dollar over 107 is not a great thing for
anything.
equities, for the S&P and the Nasdaq. So, in this environment where the S&P, the Nasdaq have been regaining some momentum, they're sort of approaching all-time highs again around 5250. You're looking for warning signs, things that would tell you that's unlikely. Rates popping higher, dollar strengthening. These are things that would tell you, okay, this is something different, and maybe it's unlikely we get a sustainable move higher.
Okay. Would you have to wait for on the flip side of the coin, closes under your moving averages or it's easier to come up with um, a bull case than it is a bear case? What would give you a bear case in this?
Right. So from a technical perspective, there are a couple things to think about. Number one, we're right above moving average support here. And most recently in early April, we bounced off of, this is the 50 and 200 day kind of clustered together.
Right.
So
Right.
breaking below there is a concern. And I would say that unlocks a potential return back to the lows from December, right? I mean, that would sort of be the next major level down, probably 102, 102.50 or so would be the March low would be sort of the immediate support, but it really, sort of suggests that we're rotating lower. Another thing is a trend line off of these lows sort of ends up right around that same place. So you have what's called a confluence of support right about there. The other thing is, if you looked at what happened in September, October, November of last year, this blue dashed line is a 38.2% retracement. This is from the 2022 rally when the dollar was sort of like the dollar strong and everything else weak year. Look at that measurement, 38.2% of the way down is right there. That's actually served as resistance a number of times. And I would say,
what a big pivot.
For sure. And breaking above there was meaningful, but then when we failed to hold it, that was a real danger sign suggesting weaker dollar in Q4. So having a similar sort of move here, could be kind of a danger sign. So we're right near levels where this feels like a weaker dollar move next.
You know what a classic example of looking left as a trader. Look how far back Dave went with this, and look how many hits. Really great look there, David. Anything you want to wrap it with that you came in here today and I didn't ask you about it?
Oh, thanks, Dale. No, I would say, generally speaking, this market, I would say for the equity markets certainly are conflicted. You have strong, the price action from mid-April has been strong. The breadth conditions have become incredibly positive. So these are the market advanced decline lines for the New York Stock Exchange for the different cap tiers. They've already made a new all-time high, right?
Yeah,
so the AD
bullish,
line on the New York Stock Exchange has already broken out. So the S&P's below, its all-time high, but measures of breadth are actually quite constructive here. The challenge, I would say, from equities is what's driving this is it's not, Meta and Tesla and Apple. It's, Southern and NextEra Energy and a bunch of utility stocks and other things as well. And that's not, in general, that's good when stocks go up, but the types of stocks that are really starting to do well are defensive sectors like utilities, like consumer staples, in a way we've not really seen for a while, certainly off of the October low. So the character of the equity markets is certainly changing, and I'm concerned by the lack of upside momentum in those leading growth names, those mega cap names that have the ability to move the S&P to new all-time highs. I think there's still more to prove in some of those areas.
You did it again, David. Crystallize a lot of things for people watching you today. and your charts are so clean. No coffee stains on them. Oh, that's when we had chart books and stuff. Okay, but really nice looks and analysis, and I really appreciate over the years you coming here and really giving 30-minute discourse of tech 101 and keeping it simple for people to understand. Really nice.
Happy to do it,
Appreciate it.
Dale. Pleasure.
Yeah, and appreciate it. So people could find you on stockcharts.com, and you still have your own service going as well.
That's right. Marketmisbehavior.com is my own website, and we feature some of the content I put on Stock Charts, my own YouTube channel, lots of places. So look forward to engaging people there anytime.
Yeah, and you could DM David if you have a question. I'm sure he'll respond on X at David Keller CMT. David
Yeah,
Keller
at D Keller
CMT.
CMT.
Okay. And Dave, thanks so much. You have a great trading season coming up here. And it's always, for me, I learn every time and reinforce good habits every time I talk to you, my trading warrior brother. Thank you.
Great to chat with you, Dale. Have a great day, great week. All right.
All right, Dave Keller, everyone. So follow this guy. You want to learn about technicals and the things that he sees. I think he gave us great looks. People are thanking you, David. And everyone, good hunting today. Good luck. Remember, don't just count your pips, count your blessings. And we'll see you tomorrow. I'll see you tomorrow. You could join the team in, looks like about 19 minutes. And I'll see everyone for the Consumer Pain Index tomorrow. So good luck the rest of the day. Get inside ForexAnalytix and surround yourself with traders better than you. Adios, everyone.